Meanwhile, reacting to the perspective of the minister on the 4 reform scorecard, the chairman advisory board Center for Economic Policy Analysis and Research at the University of Lagos, Professor Ndubisi Nwokoma, says that while he agrees with economic reforms as saying that they are necessary, he believes that the pain which came with economic decisions could have been avoided. Professor Nwokoma insists that to bridge the gap between the macroeconomic gains and microeconomic situation, government at all levels must be intentional.
We have Dangote, Bua Group, First Bank, Otodollar, and all Adenuga Junior, Globacom, determining what happens to growth at the macro level. Then the ordinary man in Akwa Ibom or in Aba or in Kaduna will not feel it. So the reforms are good. It helps the macro level to do well. But we have not taken into account what happens at the lower level. The growth is not inclusive. It is not inclusive. While we agree that the reforms have helped to address the macro fundamentals, it does not trickle down. And secondly, it is controlled by only a few in the economy. So definitely the reforms actually were not well articulated. They were done in a hurry. They didn't take into account the macro implications, and that is why there is suffering going on. At face value, yes, but it does not address the needs of the man at the bottom, at the grassroots. That basically is the reason why. So no matter what we talk about the macro indicators, it does not mean the economy is doing well.